In 2019, traditional engines of growth such as agriculture, tourism, real estate and manufacturing, alongside emerging sectors such as the ICT and financial services, are expected to drive Kenya to an economic growth rate of between 5.7 to 5.9%. Analysts at Cytonn Investment say that the economic environment outlook is positive and they expect a conducive operating environment.
When it comes to GDP growth, we still expect a positive outlook on GDP growth as the macroeconomic environment is conducive and positive for business during the year. Expect a GDP growth of 5.8% this year, slightly slower than 2018's expectation of 6%.
Despite a continued slowdown in private sector credit growth, Mugendi says private equity was showing above average trend projections as banks begin to increase lending amid stringent policies and regulations.
In terms of investor sentiment, we are neutral. We have a neutral outlook on investor sentiment. This is because we had a lot of bearish sentiment last year as the markets came down, mainly because of a lot of foreigners exiting the market last year due to the declining prices in the equities market.
There are concerns about Kenya's debt sustainability and the revenue collection capacity by the Kenya Revenue Authority against targets.
In terms of revenue collection, that is what has been negative so far, as the Kenya Revenue Authority has been behind its target in borrowing. They've currently borrowed the target is 1.9 trillion. And so far they collected 1.5 trillion in the 2017-18 fiscal year.
Even though Cytonn projects a neutral outlook for real estate, the slowdown in demand for property persists amid increasing supply. The analysts say the government's ambitious affordable housing plan could play a big role in the positive economic outlook this year.
On opportunities in affordable housing, that's where currently the opportunity is with housing deficit of 2 million and growing at 200,000 per annum, and mostly in the low income earner segment.
The season has indeed arrived for projections and economic outlooks, but the take home from this is that there's an advantage for having a diversified economy that does not rely only on one sector or side of industry. Allan Aoko reporting for Channel 1 Business in Nairobi.